So we finally got Michael Burry's 13F filing. And as we saw, he sold all of his stocks and he kept only one. And this is GEO stock. And I have a pretty good history with GEO. Many of you watched my videos before on GEO. I did over 2 videos on it. So I thought it would be a perfect opportunity to do an updated analysis on GEO as Michael Burry is back in the stock. And there was a couple of changes with the business, with some restructuring of the debt, and many positive things for the company. So I thought I would do a pretty good analysis on it and explain my thesis on why I believe Michael Burry bought GEO stock. So again, I hope you enjoy it. I would think that Michael Burry went into CoreCivic also, which is a stock that I also personally bought. But again, he didn't, and he chose GEO. But for pretty good reasons. So for GEO, if you don't really know, they have, private prisons all around the world, not just in the United States, even in the United Kingdom, South Africa and Australia. And the stock is pretty cheap, around 3.5 times free cash flow. But it's cheap for very good reasons. And for two main reasons, which I'm going to explain in this video, and explain why they are not as bad as people think. So first of all is the whole thing with the sentiment. As you know, GEO is a private prison, and you heard President Biden, you heard President Obama, and you heard many presidents for over 10 years, they were saying they want to end private prisons. They don't want private prisons at all. But yet GEO is still here, and CoreCivic is still here, and for very good reasons. Now, the big risk with GEO, which many people think it's a huge risk and it scares a lot of people away from the stock, is the whole thing with the ICE and the USMC. Because President Biden issued the executive order for ICE and USMC not to really renew contracts with GEO, because those entities, they lease the facilities from GEO. So what's been happening most of the time, the ICE and the USMC, they have not been renewing the contracts with GEO. And many people get scared that if they don't renew the contract, therefore GEO comes out as a loser, and therefore their free cash flow declines, and therefore it's a dying business. But this is not the case. Actually, GEO has been coming out as a winner whenever they really end the contract with them. Now, the state is not a problem because the state have been renewing the contracts because President Biden has no control over the states. But they do have control over the ICE and the USMC. So we're going to take a look at a case study of one of the sales that GEO actually made. Now, because whenever they want to cancel those contracts, they have two choices. The first choice is, which is very expensive, to try to transfer those prisoners to another prisons. And there's not many prisons in the United States, and they are not really building those prisons. So those prisons that are here are very, very valuable. So the first choice is to move the prisoners to another kind of government-owned prison. Now the second choice, which what the government has been doing, they've been buying the facility from GEO. So instead of them having to move all the prisoners and everything, they just pay GEO whatever GEO wants, and they just keep the facility, but they own it, not GEO. And you could look at a facility they sold called Talbot Hall in New Jersey, and they sold it for around $13.2 million. Now you may say, okay, $13.2 million, what's the big deal? Well, if you actually look at what they had it on book, and this is Talbot Hall on their book, New Jersey, and you could look on their book, it's only $3 million. So they had it in their book at only $3 million, and they sold it for $13.2 million. This is more than 10 times what they had it on book. 10 times. And there's many of those things. And again, you could watch my videos before. I've gone in many such cases where they sold those facilities 2, 3, 4, 5, 6 times what they actually had them on book. And I can go on and on in many kind of examples that where this kind of thing happened. So now us looking at this, we know that GEO is sitting at a pretty valuable real estate portfolio. And if the government really wants to end private prisons, they mostly have to buy those facilities for more than they are worth. And GEO has been using this opportunity to sell them for more than book and try to pay down the debt, which leads me to the second worry. Now, the first worry, as you saw, whatever the government has been trying to do for the past 10 years didn't work. And if they do end the contract, GEO is the winner, not the loser. Now, the second big problem with the company is the debt. They do have a lot of debt. Now, the company makes like 250 million of free cash flow, but as you can see, there's over 1.7 billion maturing in 2024 and 277 million, so around $2 billion maturing in 2 years alone. Now that would send the company straight to bankruptcy because again, GEO cannot afford to pay it. Now the real estate portfolio may actually be worse, more on liquidation, but again, the company doesn't want to liquidate itself. And this was the big risk with the stock. But it's not really a risk anymore because GEO did a restructuring of the debt, and this was the positive news with the company, as you saw on the restructuring between 2023 and 2028. So the 2023 and 2024 debt was around 2 billion, and they reduced it from 2 billion to approximately 600 million. So this 2 billion now is only 600 million. Now the company has 600 million of cash now on the balance sheet, which means that GEO is not going under, it's not going bankrupt. And this kind of payment, which is around 1.4 billion, is going to be moved to 2028, and GEO can really pay it off through free cash flow and some asset sales in the future, which really kind of guarantees that the company is not going to go bankrupt. Nothing is guaranteed, but it's more likely that it's not going to go bankrupt because of this restructuring, which is pretty good for the company. And the companies, they said they are pretty confident that they can reduce the debt by 200 million to 250 million annually, which is again pretty good for the company as they were able to move their debt far in the future. But this has a risk with it because the new interest is around 11%. Now they were paying around 4 or 5% rates, but now they had to pay around 11% interest rates, which is again going to decrease their free cash flow by a little bit, but it's going to guarantee kind of the company surviving and not going under anytime in the future. Again, this is not Apple stock. This is a pretty hated stock, but again, sometimes the things that are hated are not value trap, and they can actually offer a lot of value as no one really wants to touch them. And this is the whole kind of investing theory of Michael Burry. You know, whenever he talks about ick investing, something you get an ick whenever you say it and you don't want to touch it. Well, maybe there's some value, maybe a cigar butt, or there's some type of value that the market is not seeing. And there's a pretty good value with GEO, and I'm gonna tell you exactly what it is. Now, the company does have around 600 million of cash, around 1.1 billion current assets. But again, the biggest risk with the company is the long-term debt, and the long-term debt of GEO is around 2.5 billion. And that's a lot of debt, as they only gonna make, I believe, even less than 200 million in free cash flow because of the interest rate, maybe around 175 million to maximum 200 million annually of free cash flow. The company was making 250 to 300, but I'm pretty confident they can make around 200 million, and this is kind of what the company said, 200 to 250 million. So they are pretty confident they can achieve this free cash flow every single year, even after the debt. But 2.5 billion is a lot of debt. But looking at the current assets, or the assets of the company, where they have the property and equipment, they have the real estate portfolio valued at only 2 billion. Okay. Now, if you look at GEO's sales and CoreCivic also made pretty amazing sales. And CoreCivic is trading at $10 per share. Now, based on the latest estimate of what CoreCivic was able to sell their assets, the stock is worth $30 per share, minimum. Okay, but in terms of GEO, if their real estate portfolio is valued at 2 billion, I would say at least they should be really valued around $3.5 to $4 billion, which means that GEO can sell some of its assets to actually help kind of cover the debt and kind of have, pretty amazing runway ahead. So this is the whole thing with the long-term debt, and I believe GEO can kind of take care of it through free cash flow and many asset sales. So what's the value proposition? What's really going to cause GEO stock to go up? Because it's pretty much been dead money for years. Well, if you look at the other stock, which I actually own, and that's CoreCivic. CoreCivic is trading around 6.5 times free cash flow. GEO is only trading at 3 times free cash flow. Now, why has that happened? because CoreCivic was earlier than GEO. They transitioned from a REIT to C Corp, they cut the dividend, and they were paying down the debt aggressively. So they are way ahead of GEO, and CoreCivic's debt is pretty manageable. I mean, it's very little risk with the debts that CoreCivic actually have, and they have been buying back 10 to 20% of the company. Now, GEO is not in this position yet, but it can potentially be in the future. So in the next 3 to 4, maybe 5 years from now, if GEO keeps paying down the debt, as the company is not going under due to the restructuring of its debt, if they keep paying down the debt, their debt would be lower, it would be more manageable, and this way the company can get a multiple expansion. So if GEO trades at 6.5 times free cash flow like CoreCivic, this is a double for GEO stock. And this does not include any kind of change of sentiment from the government. Because if we do have a Republican Congress or a Republican president, which they are more pro-private prisons than the other party, they may be able to help those companies actually build more prisons. And this has been happening in states like Florida and a couple of other Republican states where they were giving GEO and CoreCivic contracts to actually build prisons. So whenever you have a kind of government who does not want to end private prisons, this could kind of help big institutions get more comfortable with the idea of maybe investing in private prisons, and it could also give those companies multiple expansion. So this was really my analysis on GEO. Them paying back the debt is the main catalyst for the value expansion, and a potential change in sentiment from a Republican or a more kind of friendly, private prison friendly Congress and president could really do a lot of things to those two stocks. And GEO and CoreCivic, I mean, they're pretty undervalued, inflation proof, recession proof. So it's pretty amazing, and it's good to see Michael Burry back in the stock. So this was my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.